You are listening to chartingwealth.com for Thursday, the 23rd of July, 2015. We always start with IYY, which is the total market. This tracks the entire stock market and what's going on. We always look at the 2-day chart first. Each candle represents periods of movement of 2 days, that is of price movements. And we had, starting back around the 13th of July, we saw a major move starting up in the market, and it moved on the 13th up. It moved up again on the 15th candle, up again on the 17th candle, and then on the 21st, we saw a down move. Actually, you could look at that as a very strong down move. Why? Because it is a type of tweezer top. We had a green up candle followed by a red down candle. Now, the strongest tweezer top is outside the Bollinger Band. Those are the volatility bands we have at the top and the bottom of the charts. On our charts, they are in their dark blue dashes. And then the area of price movement inside the Bollinger Bands is a light blue area. Those of you who are listening via audio, I'll continue to explain this to you, but I always encourage you to go to our site and check out our video that we always post both on Facebook and Twitter and at the site itself, and you can sign up for our newsletter. But what we see happening is a tweezer top down move starting on the 21st, and this again is on the 2-day chart, and then further movement today, actually breaking through the 2-day trend line that we had drawn on the up movement. That's pretty significant, seeing that happen on the 2-day chart. Now, we don't have any confirmation yet on any firm down move. Why? Because we crossed over going up around the 15th, actually between the 15th and the following candle on the 17th. We had a crossover on our MACD. The MACD is the moving average convergence divergence. It is the big indicator that we like to use. And it crossed over going up about the same time, about a day, 2 days later, we saw the derivative oscillator. Whenever those cross at the same time, that always tends to show us a strong up move or down move, depending on which direction, if it's red to green or green to red, and we see the MACD crossing over. So what we have now is we have two red down candles and a breaking of the 2-day trend line. If we drop back to the 4-hour chart, we can see where the market ended just below for the afternoon on Wednesday, ended just below the 2-day trend line. We have a crossover on the 4-hour chart, half-day chart, and almost exactly the same time, which is significant, we have the derivative oscillator rotating over. Now, what are we looking for? Well, we've been in a strong uptrend. If we see this continue to move down and then move back up and cross over while the 2-day trend line continues to be in an up movement, that means no crossover going down on the MACD, then we look to buy going up. If, however, the market really is rolling over completely, then of course we'll look for a down move on both the charts, and we'll look for a buy-in point on a down move if you want to play the down move. Some people are very conservative and only want to make money when the market goes up, so they buy an index like the IYY, the total market. They buy it while it's rising. They let it rise. When it turns over to go down, they get out and then buy it cheap again and let it ride back up. But of course, for sophisticated buyers, investors, you can of course make money in both regular funds that track up movements in the market and inverse funds that track down movements. It's up to you. Our advice is only that you practice this, that you do virtual trades, setting up your virtual account. You can go to all sorts of great training at our website where we tell you all about how to do that. And please make sure to sign up for the Facebook and Twitter feeds where you'll get all of those things. We pump that out constantly, and it's very good for you. Now, let's go from IYY to a similar chart, which is SPY. And again, IYY is the total market, SPY is the S&P 500, which are 500 big stocks. And it looks similar, not always the same as IYY. In fact, this doesn't. In fact, Yesterday's candle, or the candle for the 21st on Tuesday, representing 2 days, Monday and Tuesday, that candle actually is a green candle, not a red, as was the previous candle on IYY. And then today's move, again, did break the 2-day trend line and is a small red down, almost a doji. There wasn't a great deal of movement up or down from the closing to the opening, but it was technically down today 0.18%. That is for the day. And we see, again, a crossover on the 15th with the market going up. No crossover on the 2-day chart, so we're a confirmed uptrend. Now, if we look at the 4-hour chart, it did cross over also at almost exactly the same time that the derivative oscillator crossed over. However, when we look at where the 4-hour chart ended, it didn't quite cross over the 2-day trend line. So even though we do have a crossover here, not a strong down movement. If we see the market move back over and crossover going up on the 4-hour chart, that is when you would consider seriously an up trade on your virtual trades, like purchasing, say, SPY. So keep an eye out for those things. And again, the reason I use the word virtual, we're an education site. We're not a stock calling service. We are not in any way giving you trading advice. We're giving you training advice. So that is where we stand on SPY. Look for a continuation in the up move. Now let's go back and look at the Qs, my favorite chart. The Qs has continued to move up, actually the last 4 2-day candles before the candle that's been drawn as of today on the 22nd, Wednesday the 22nd. Those are all strong candles. In fact, a huge up candle on both the 17th and on the 21st, right outside the Bollinger Bands. This is on the Qs, the NASDAQ 100. The movement today on the Qs was down 1.13%. And what we see is the market opening about mid candle on the last 2-day candle and then closing down. There was some up movement, a push up by the bulls, but a pull down by the bears. And like I said, technically for the day, the Qs NASDAQ 100 was down 1.13%. Derivative oscillator continued to expand. Actually, it looks like a little bit of maybe, well, I wouldn't even, it looks like the MACD has just continued to accelerate. So watch what happens. Now, if we drop back and we look at the 4-hour chart, what do we see? Well, we see almost a crossover going down, not quite. We don't see it getting anywhere near the 2-day trend line. So again, let's just continue to watch the Qs. If we see some acceleration on up moves, then we might look at a potential buy-in point on a virtual trade there. So technically, the SPY, the Qs, the NASDAQ 100, and the total market are all in uptrends with a little bit of a hiccup and a down move on the 4-hour, the half-day charts. So hopefully we'll see those roll back up again and we'll have a good buy point in the next day or two. Now lastly, let's range back out to the 2-day chart and let's look at gold. What has gold done? Continued to accelerate down. We've talked about getting into a down move on gold or getting out of gold. As far as the 23rd of June goes, we have a nice trend line that it's continued to stay below. We could probably redraw our trend line. Actually, that wouldn't be a bad idea. I'm going to do that right now as we speak. See if I can attach a 2-day trend line showing the acceleration and the moves down. No, it's sort of hard to do. Not the best of trend lines, only connecting 2 candles on the 21st and the 22nd, but we'll see. I mean, gold has continued to spike down and it is outside the Bollinger Bands. If we start seeing, we may see the makeup of a tweezer bottom in gold, just like we saw a tweezer top forming, type of tweezer top forming on the total market. We might see one on gold. That would mean that the bottom candle on the 22nd would be followed by a green up candle. If that occurred, then that is a strong signal that gold is turning around. But we don't see that now. But again, be aware of that and look for it. Gold is in a confirmed down move. If we look at the 4-hour chart, we can see what happened through the course of the day. Large movement down in the morning and a little bit of up movement in the afternoon, but gold itself was down a little over 0.5%, 0.54% for the day. Derivative oscillator falling off a little bit, MACD falling off a little bit. Maybe gold's losing a little bit of an acceleration down. We shall see, but it has continued to move down for many, many days now. Continue to watch gold. And if you are in a down move on it, of course, you are doing quite well. If you got out and took your profits, you are probably very happy because at some point you will have a much less expensive buy-in on gold. Remember, you buy low, you sell high, and you do it over and over and over again. We appreciate you joining us. We're going to range back out to the total market. That's where it ended. Thank you so much for joining us. Again, join us every day of the week that the market is open. Join us for our market review. And remember, we always have our end of market review and forecast that we put out Sunday nights. Thanks so much for joining us. You can sign up for all of that at our website, chartingwealth.com. Lots of free training and information there. Thank you for joining us. We wish you the best in trading from chartingwealth.com.